Great. Thanks, John, for the intro, and welcome everybody to the session today. I think, really the purpose of what I wanted to get through in this 50 minutes we have before lunch is to look at kind of what is the real impact of APIs on the financial industry. So I think, we as a financial industry have this habit of following buzzwords. So if it was, 2015, it would have been fintech. Shortly after that, it was blockchain, and then obviously open banking and APIs have come into the vernacular recently, along with embedded finance and all of these other potential applications of APIs. So I really wanted to tap on the expertise of the panel here to understand a little bit more about what we're seeing, both in terms of the opportunity in Asia and more particularly around Southeast Asia, especially where we have some of these financial inclusion challenges. We've done, as Kapronasia, we've done a number of studies on APIs and open banking in general, and there's some fairly unique use cases out there. I mean, you probably see these initially more personally here in Singapore when you use a platform like Grab and you're offered insurance for the ride, and the merchant, being the driver in that case, also has that option. We've seen a platform in Indonesia that offers gym ERP software. So you run a fitness center or multiple fitness centers. Initially, the idea was just to help people and gyms basically manage classes and bookings and staff schedules and memberships and all of this. They found that they could embed payments, which enabled that part of the ecosystem, and then embed lending for both the gym itself and the people that are using the gym. So the applications of these are fairly endless in many cases, but the adoption both here in Asia and other places has been a little bit lacking in certain areas. And especially now that we're facing this more challenged banking environment with higher interest rates, obviously all of the situation with the SMB banks in the US, Silicon Valley Bank. So I want to touch on that too. In this kind of more challenging environment, where does that leave APIs and open banking in Asia in general? So I have a great panel here with me. I think they would do a better intro of themselves than I would. So maybe when you start off your questions or your answers, rather, you can just give a brief intro on yourself. But Pat, I've known for many years, and Elevandi, maybe you can start us off with kind of defining what open banking is in your mind, and maybe talking about what's happened in Europe, which was really, arguably the birthplace of open banking.
Sure. Thank you, Zennon. So my name is Pat Patel. I lead a business called Elevandi. Elevandi was a spin-out from the Monetary Authority of Singapore. And so the purpose of Elevandi is to bring together the public and private sectors to advance financial services. And so we're very fortunate to run the Singapore FinTech Festival. We also have a number of projects and programs we run in other regions. So Europe is one where we have a partnership with the Swiss government, and one in Africa as well with the Rwandan government. And so I've been in this space for a little while now, and when I think about open banking, I kind of feel quite tired about the two words that come together. I think, as Zennon quite rightly put, 2017 was a big year for open banking, where the Competitions Market Authority came out with this innovative framework to which ultimately formed open banking. And so it's gone on a journey. So it's been 5 years now, there or thereabouts. There's about 5 million users, I think. And it's not really moved a great deal. And you can kind of contrast this with, say, what's gone on in Brazil, which in half the time have managed to get to in and around 5-6 million in a very short space of time. So there's kind of, a massive difference there. And I think, when we break down what open banking is, it's to open competition. It's to create opportunities outside of the large FIs for other players to come in. So whether it's some of the regional or smaller banks or new entrants, or even some of the fintech players. And so to create new products and services that facilitates the easy transfer of either accounts or financial products that can kind of flow quite easily to consumers. And so making it easier for the consumer to either switch or see everything in one place. And that was the vision of it. So I remember in kind of 2015, 2016, there was a vision around a home portal. How could you have a home portal that would have all of your bank accounts in one place, all of your energy bills in one place, any of your subscriptions, and that was kind of the dream and the goal. And it kind of hasn't really moved. You know, we've seen outbreaks in Australia. I think they've started to move quite quickly on these things. But I think there is a lot to happen, and I think we'll get on to some of the challenges, and keen not to monopolize the conversation here.
My first experience with open banking was in 1999 when I was working for Citibank, and they had My City, which, if you're from Citibank, you probably remember this, but it was basically screen scraping of multiple different websites to bring it together on one, and it fascinated me endlessly for about a week, and then I never used it again. And
it's how that company, so Klarna, for those that know Klarna well, they bought a German provider called Sofort Überweisen, and that gave them the technology to screen scrape and, you know, move across multiple markets. Prior to that, Klarna was in one market. As soon as it bought this German player, it could literally move across multiple markets, and then it started to develop API technology as well. And this is way back in kind of 2006, 2007, in and around that time.
It could be the introductory chapter on your open banking book when you publish that, or maybe it's Umang that's going to write that.
It'll be closed banking.
Closed banking, yes. Umang, let me come to you. I mean, Pat talked about increasing competition, and I think certainly in developed markets like Singapore, Australia, the UK, Europe to a certain extent, that makes a lot of sense. I'm curious about developing markets. So, like, I mean, a lot of the work that you guys do with the Apex platform, the hackathons, and are focused on developing markets and the clients that you work with around that. Can you kind of expand on what Pat was talking about, but more on what you see the opportunity in some of the other markets around Southeast Asia in particular, where I think the idea is not so much around competition, but more inclusion?
Hi. My name is Umang Moondra. I represent a company called Synfindo. You will remember this now. And we operate a platform called Apex. Apex, like Pat said, is a spin-off from an initiative started by MAS and IFC, a platform that fosters innovation through collaboration between FIs and fintechs. Financial institutions and fintechs do want to collaborate with each other, but that process of collaboration is extremely painful, and our platform makes that process much simpler, faster, easier. So do look us up, and happy to work with any of you. But in the developed world or in Europe, open banking has largely been driven by regulation. Right? They have regulated it, and frankly, as Pat said, it's had very, very limited success. In the developing world, emerging markets, whatever you call it, there's been no regulation around that. It has become more a spirit of collaboration, how different players can collaborate with each other to actually present much better, much stronger client value propositions. And that is what has driven things forward. And to my mind, that is an approach that has worked much better, much faster. Obviously, it doesn't lead to industry-wide initiatives. Like you have SG Findex here, which has also started off small and stuff. But it doesn't lead to industry-wide initiatives. But allowing that to happen without regulation actually does a lot more, a lot faster, a lot better than forcing it down regulation. Across, you go to Indonesia, you go to Philippines, you go to India, any of these places. The partnerships that are going on between wallets and insurance companies, between e-commerce platforms and lenders and all of this. None of this is driven by regulation, but it's all happening because there is a market need, there is a customer. And therefore, to me, this whole how people construe open banking all around PSD2 and all of this stuff and all around technology, frankly, is a misnomer. It is all about how you can use the framework to add value to the end client. And that's about it. The end client could be an individual, could be an SME, could be a large company, whatever. But how do you add value? And that's all that it's about, giving the power to the customer, giving the customer more choice and crafting value propositions for them. So, as long as we have that right, and that's what's happening much faster in emerging markets than it's happening elsewhere, is what my thought is.
Indra, I want to come to you. I mean, that concept of framework that Umang brought up is quite interesting. Please give a brief intro on Nexus and And if you can talk about that transition from being, a bank-owned product to being an independent product, that would be useful as well. But how has your view of the end value that you're providing to the customer, and in many cases not just consumers but merchants in Southeast Asia, how has that changed over time?
Thanks for that. So, good afternoon, everyone. My name is Indra. I am with Standard Chartered Nexus. So, if you were here for the speaker two speakers ago, we are an entity under Standard Chartered Ventures. And it's very exciting times for us right now because in the next couple of months, we will spin off to be a standalone entity. So before I get there, maybe just a quick introduction of what we do here in Nexus. Standard Chartered Nexus is actually a white label banking as a service solutions. So what we do is we partner with ecosystem partners, and I'll share a little bit more later on, but ecosystem partners in the region who typically will not have a banking license, but is interested at some form or another to issue out banking products and services to their customers. So as a business model, we clearly had quite a bit of use cases. When the team first started out pitching, trying to bring in and discussing bringing new partners basically across the region, Indonesia, Malaysia, Vietnam, Philippines, just to name a few. There was obviously a lot of interest. But at some point, we are still a banking entity. So we are not giving these guys, our ecosystem partners, a license as a standalone. They will still be banking on the Standard Chartered license as of now, in whichever markets that they wish to operate in. So because of open banking and because of what we have done, the team had to regularly check, I guess, putting it loosely, check in to make sure that whatever we are doing, whatever we are developing from a developmental standpoint, whatever products that are being issued across in the market, do conform with those open banking standards that have been provided. As per what my panelists here have shared, a lot of this have so far been very on the fly, right? It's not quite matured just yet. So it also means for us a little bit of getting used to, a little bit of tweaks that needs to be made accordingly. I think, yeah, in a nutshell.
Just sticking on that point with you, Indra, for a second. I mean, the previous, Umang and Pat brought up the idea of market-led versus, market-driven, regulatory-driven versus market-driven. And you spoke a little bit about, being prepared for that, the nuances of each of the markets. But how is that? I mean, if you look at a market like Australia or Hong Kong, where it's a little bit more prescribed, versus in Indonesia or some of the other markets, I guess eventually the Philippines is launching theirs as well. How does that impact the way that you look at the market and the products that you're launching in the market?
Oh, it impacts greatly, right? So, give you an example. The open banking framework by Bank Indonesia, the BI Snap framework, which was brought up, I think, just last year. Obviously, so again, some context to this. We, as Nexus, we launched a partnership with Bukalapak. Buka happens to be one of the large e-commerce retailers in Indonesia. And when we initially launched, we were not, I wouldn't say we were not prepared, but we didn't expect the BI Snap regulations to come on board. So what we are doing right now is to quickly adjust, amend whatever rules and regulations that were needed to kind of abide by the BI Snap regulations for us to make it in time for, I think their expiry is by middle of this year, June or July. So from an adaptation standpoint, again, based on the developing countries that we are typically interested in, this needs to be a modus operandi for us. It needs to be something that the team looks at more rigorously. It needs to be something that we focus on in order for us to do good work in the country.
Got it. I mean, going on, Pat, coming back to you, changing regulations are obviously one aspect of this. I think the one thing that I guess the smarter people in the room probably would have predicted, but with everything that's happening in the U.S. right now around SVB and the other banks that are struggling now, how do you think that leaves Asia? I mean, so far it seems like Asia hasn't been terribly impacted by that, but how do you think that'll impact the calculus around thinking around open banking and the way forward, or does it?
That's a good question. I think Asia hasn't been impacted, but the ripples are likely to create an impact, and there's a lot of unintended consequences. So what happened with Three Arrows last year, a lot of the industry said, yep, okay, there'll be a crypto winter. It will subside very soon. There will be no further fallout. And that was the general consensus. And then all of a sudden, FTX happens, Silvergate happens, and then other reasons, obviously, the other two banks, slightly smaller banks. So it's going to be impacted. And then when you look at open banking, I think, there's more of a fundamental question here that if you look at, say, what India has with the India stack, and for those that are unaware, it's a digital identity layer that's coupled with an interoperability of payments, and then you have a data exchange, both financial and non-financial, and then you have a consent architecture framework wrapped around the top, which has been a bit of a challenge, but I think it's moving in the right direction. If you have a set of digital public goods, you don't need open banking. There's just no need for it. And I think the way that the market should be moving is towards those public goods. So you don't need to put band-aids over an aging system or having to get banks to innovate, because the core foundation of an economy has these digital public goods, and you can access the data, you can access identity, because that's a challenge, and do the KYC as well. All of these things working in unison just means you don't need open banking, but you do need APIs, because then you're connecting into these different stacks. I think that's the key bit to this, and I know that's not really the question you asked. I kind of wanted to mention that. But in terms of how it will impact open banking, I think, to Umang's point, if it's not regulated and there is a necessity, then that's a mother of invention. And so organizations will find ways to connect in and do different things. Whereas in Europe, you have an established banking system. It's very mature from a financial services point of view. And so some of the larger FIs will tend to keep the status quo over trying to innovate on top of it, because they don't stand to gain a great deal, because you already have things that you need already. Why would you open the pie up to others? Whereas that pie in developing markets in parts of Asia is there to be taken, and organizations large and small can work together to create new pies. I think, it's making me hungry now because it's lunchtime. Yeah.
We had discussions of pasta before, and now we have pies. So I guess pies will be.
It's all about the pies.
Figure out how we can thread that in. Pat, I want to stay with you though for a second. I mean, this idea of digital public goods it's a little bit like open banking on steroids, right? I mean, it opens up the market to more participants, but I guess if you're a bank, you'd be kind of scared about this, because a lot of the or the digital public goods, where you talk about a payment network or identity or whatever it is things that we would have traditionally relied on financial institutions to provide, but now they're available freely. So I think it would certainly benefit the fintechs who no longer have to go to a bank to negotiate, access to these tools. I mean, is that the way forward? Are the banks going to be the losers in this equation then, and the fintechs and the other kind of technology organizations that are better equipped to excel and innovate, are they going to be the winners?
No. So the banks have more resources than the rest, and I think what it means is they just have to innovate faster. So rather than maintaining the status quo, you have to kind of think beyond the status quo and think about new propositions that you can start to develop. And obviously, Stan Chart has been doing a great job in this space, not because you're sitting on the panel, but the last few things that I've been engaged with you guys, you're trying to push the needle there. And I think all it does is make banks invest a bit more in innovation and looking at how you can create new value propositions. That's it, and partner with some of the fintechs, because I think that's super important, and to what Synfindo does as well, that collaboration between banks and fintechs and leveraging those APIs to connect with new value propositions, that's got to be where it is. But in the Western markets, where status quo is kind of the usual, the norm, then there is no appetite, there is no incentive to continue to innovate.
I mean, that question of innovation, Indra, let me come to you on that. And kind of use Singapore as an example. I mean, I've been here for 5 years now, and I forget at which SFF DBS famously, announced its 100 APIs, and I'm sure some of those are getting used. But I mean, in the developed market, I mean, a lot of Nexus's success has been in Indonesia and other frontier markets. I mean, how does that look for a place like Singapore, where it's it's market-driven innovation with standards that are provided by the MAS? I mean, where are the opportunities?
Before I answer you, I think I want to agree first and foremost with what Pat mentioned earlier. So I think the use case for Standard Chartered as a bank in Indonesia was extremely clear. It came to a point where the bank needed to innovate, needed to think about different ways to increase their balance sheet. And one of these, obviously, strategies would be like a banking as a service type model, which we have done. In a lot of the Nexus, I guess, focus markets that we have, they are still very much around the developing countries, not so much in the developed countries. That said, I think by and large, open banking as a regulation, I think the banks, and I agree with what Pat said earlier as well, right? The banks can, or because of our resources, will be at the front of gaining the most of it. It's just a matter of embracing the open banking regulations and making sure that we are ahead of it rather than being reactive to it. Again, from a developed markets point of view, well, personally, we don't see an immediate use case for banking as a service in a developed country like in Singapore, like in Hong Kong. But for certain aspects of digitization, especially when we do spin-off, shameless plug, when we do spin-off into ODEX in the next couple of months, which then allows us to work with any banks and any fintech to digitize any part of their service, any part of their modules, then obviously there are certain more interesting conversations or discussions that can happen between what we do as ODEX and a fintech provider or a bank per se.
In that scenario, though, I mean, you become a technology provider, which is arguably becoming a technology provider is much easier than becoming a bank. I think everybody would agree to that. How does that change your competitive positioning, though? Because to a certain extent, I mean, one of the big advantages that Nexus had was you had this huge bank behind you that immediately provided the balance sheet and the license and everything else that we needed. How will that calculus change as you go forward? Because you're going to be competing with many more fintechs that offer a kind of similar services.
Well, to be honest, I think it puts us in a stronger position. On the contrary, right? Because right now, the only other bank partner that we could offer our banking as a service solutions to would be from Standard Chartered Indonesia, Standard Chartered Vietnam, whichever and whatever market that may be. Because we are spinning off to become ODEX, which is a standalone entity, again, with no, apart from the fact that Standard Chartered will be a majority shareholder, otherwise they've got no say in terms of which bank we partner with which bank we are allowed to. It allows us to open up our suite a little bit more. There are hundreds of banks in this region who is in a huge need to upgrade their banking technology, banking capabilities, right? And we are just focusing on the end-to-end banking. I haven't even broken down into a particular module like an onboarding origination, for example, or an eKYC. And so the use cases would be plenty, and we are not just reliant on one bank. Yeah, obviously having the big brother behind you is always great, but we're not reliant on that anymore. I mean, it allows us to freely approach, discuss, and hopefully solution for a service that would make sense for both parties.
Got it. I mean, Umang, a large part of what Indra was talking about is collaboration, and Pat kind of hinted at this before. Can you talk about how, I mean, Synfindo is relatively new, and you guys taking over the Apex platform. In this brief period of time since you've kind of taken on the helm of this, what are the changes that you're seeing, and how is the nature of that collaboration changing? Because you have both, at least on the platform, you have both financial institutions and you have fintechs. And
so let me try and answer that as best as I can. You mentioned in your earlier question that when we were talking to, when Pat and Indra responded saying, will banks lose out? Well, and will fintechs win? I don't think anyone will lose out or anyone will win in that sense, right? It's not one category. Whoever can innovate faster and actually provide the stronger customer value proposition is what will move ahead. Fintechs can do that faster because they're very focused on what they have. There is no legacy, there's no bureaucracy, and all of those things that we say. Banks or insurers on the other side have resources, have the muscle power, have the holding power, and therefore both sides have their advantages. The fact is that yes, there are B2C fintechs and stuff like that, but it doesn't have to be this versus this, or bank versus the fintech, which is exactly what we're trying to do, is that today banks have thousands of projects going on, many of them regulatory, which are their key focus, many of them are about sustaining the platform, upgrading the platform, all of which are a must-do. And in the midst of all this, to be able to go out and roll out new customer capabilities, if they decide to do this by themselves, is very often a challenge. There are fintechs out there who have great capabilities in specific niches. And if banks, insurance, whoever, FIs can actually collaborate with them, can partner with them, that's where the sweet spot lies, right? You look at many bank apps these days, you see the app as it is, but they provide you personalization, personalized advice. It's not banks that they've done it by themselves. There are fintechs that they have partnered with, right? And we know many of those examples. I'm not going to name them here, but they're all there. What I see increasingly is if I was involved with Apex right at the time that Apex was initially formed, right? And just 3-4 years back. Between then and now, the whole talk has shifted a lot moved from competition to collaboration, and which is what we've also seen more and more in the last few months. It is how can financial institutions actually not necessarily compete, but collaborate with fintechs to move ahead much faster. If I give you even a very different kind of example, and which is one of my favorite examples, you talk about NPCI, the National Payment Corporation of India, right? Which processes about 8 billion instant payments a month, 175 billion US in instant payments last month, and volumes going up every 5-6% every year. Every month, not every year. 5-6% every single month. That's massive growth. When they were looking for solutions on how to simplify payment authentication such that it could become, the usage could be much wider, they used our platform to be able to host hackathons, to be able to find the right kind of partners, to be able to then actually test them all on our platform. So all of that happened on the platform. This whole spirit of, no, you cannot do everything in-house. There are providers out there who can actually provide great solutions that you should partner with, that you should collaborate with. And that's what we're seeing more and more of happening. Where that the mindset has changed from competing to collaborating to find out the right partners who can do that. So that, yes, you can do what you have to do, which is core to you, but there are various other things that you can partner with others to do.
Yeah, that shift from against us to with us is a big one, and I've heard that multiple times from some of the banks directly themselves. Pat, I want to come back to you. I mean, the risk in all of this in the current environment is that we take our eyes off the ball because of these challenges that banks are facing. Do you think the current environment in the banking industry, like the SVB challenges and everything else, will inhibit innovation and collaboration? I mean, where does this leave us in terms of being able to do this? Because I think, as we mentioned, you've done events for many years, the focus shifts from fintech to blockchain to open banking. Is it going to shift again? Are we going to lose sight of what this is, or is it going to be the new normal, maybe in the background that nobody talks about anymore because it's just there, like a digital public good?
Yeah, no, it's a really good question. I think we're going to see two types of banks kind of emerging. One set that will continue to power through and innovate. They have backing by their board, and they're doubling down. These tend to be organizations that have a digital mindset, but we'll see a whole raft of banks that will cut back and will literally just stay as they are to maintain the status quo. I think there is a nervousness around, say, external APIs. I think there is more of a focus on the internal. So if you'd be interested to see a study done on this, on the number of APIs used within the internal kind of structure, to those used externally. And I think if you looked at a chart, I'm just making assumptions here, I think you would start to see a slight drop off on the external ones. I think that will be one thing. I think with fintechs and, what's happening with the fintech sector, and there's a lot of uncertainty at the moment, which is really sad for a lot of startups, is how will they navigate funding? How will they navigate moving beyond, the challenges that have happened? Because, with SVB going down, I think that's kind of broken this whole kind of VC, and some would say Ponzi scheme, kind of from seed to kind of exit. What does that look like? Your exit strategy is not necessarily the golden handshake. You've managed to IPO. So that whole piece is going to impact a lot of fintechs, which in turn will impact that collaboration model. And those that do remain, I think, will be resilient. And I was fortunate to have a conversation with a very interesting guy last year called the founder of Cred in India. And when I asked him about, with all of these wins coming up, headwinds, what does that mean for your business? And he kind of said that, a lot of his peers are struggling, but he sees this as an opportunity. And it was quite beautiful the way he talked about this, is that we see this, these downturns happening in other markets as an opportunity for us to be more resilient. And we are building our culture to be super lean, super fit. So when we come out of this in, say, mid-2024, we will be able to power on and kick on from that. And I think you will start to see those fintechs doing remarkably well because they've got this different mindset about them. And it's those that we hope that will be driving innovation with banks together, and how you guys are seeing things, the collaboration piece. But I do think there'll be a call. I think that's very simple. That will hold back innovation. I think banks, quite a few of them will kind of maintain the status quo.
So July 2024 is when everything gets.
I spoke to God the other day, and he told me it was going to be middle of 2024.
Which God? Is it?
They all agreed. There was a meeting, and that they all kind of came to a general consensus. Yeah. You would have loved it.
Yeah, I'd never get invited to those. Indra, I want to come to you. I mean, the flip side of the fintech is obviously the bank side of things. How has, in certain cases, SC is lending through Nexus to your partners. How has the risk assessment that the bank takes on some of these, both, I guess it's more on the SC Venture side is investing in fintechs, but more on a regular basis, the lending and the micro lending that happens on a regular basis to SMEs and to other organizations. How has that risk appetite changed within the bank, and the risk profiles of other banks as well that you look at?
Well, I can't say too much about from a Standard Chartered standpoint. Maybe I share a little bit more from a Nexus standpoint. And because from our view, we work with three basically groups of people. The first guys will be your partners like my Bukalapak, who millions of customers. And when we decide to work with a partner like Bukalapak, obviously the most basic things would be to understand what their outlook is like, what their public profile is like, what sort of customer counts or numbers are they looking at. The second group that we look at from a risk onboarding standpoint is obviously the banks. Those groups of people. Well, arguably people say, but banks typically will have some form of money. It's quite easy to work with them. Well, that's from a Singapore standpoint. We must understand that in a developing country, there are really plenty of smaller banks there, and we need to do a very rigorous kind of assessment that's needed, right? Before we decide that, okay, this bank looks to be the right profile for us to kind of work with, and especially if we are going to venture into a brand new market or brand new territory for us. And obviously the third guys would be our vendors. And this is when it gets a little bit more tricky. On the virtue of the fact that we then work as Nexus in itself, just for that one Bukalapak product, we work with hundreds of vendors, right? We plug in with hundreds of vendors to do hundreds of API plugins. So when something like that happens, obviously we need to go through a very rigorous process. We need to understand the vendors thoroughly, who are they in business with, what kind of solutions they provide, really a end-to-end onboarding type process. But more importantly, we also go through a software escrow agreement with them, kind of really to cover our assets, apologies for my French, but cover ourselves in that sense, such that, in case something goes south with that particular vendor and with that particular vendor's business, it doesn't leave us in a lurch, right? And obviously with APIs, and it's easy, quote unquote easy, to then look for a new vendor and all that, but the onboarding process will then take time. Understanding the individual APIs nuances will also take time. So ideally, that's not where we want to get to, and these are just, again, some of the careful measures that we have in place, again, from a Nexus standpoint.
It's very interesting. In Umang, the demand on the platform and Apex, have you seen that kind of mirroring what Indra is talking about in terms of the specific pain points and challenges that banks or other institutions are looking at?
Actually, during COVID, it was very clear not very clear, the demand was focused around 2-3 key areas, right? You suddenly can't meet people can't walk into your retail stores, people can't walk into your branches or your kiosk or whatever. And therefore, there was a massive demand for financial institutions, right? Not just banks, any kind of financial institutions looking for digital onboarding, digital KYC solutions. So that was very clear, right? Because that was during COVID, and the circumstances necessitated that. There was also a lot of, like I said, a lot of demand for digital KYC, digital onboarding, and also payments integration. Okay? So this was very clear across all organizations. This is what was happening. Post that, what we are seeing is that it's not one particular thing. Different organizations, different stages of evolution, different target markets, different geographies are all looking for various different kind of things, which makes it very, very, very interesting. The topics that are very hot are people coming on board and looking specifically for blockchain solutions and this kind. We don't see too much of that happening. We see actually stuff happening in the very basic nuts and bolts of day-to-day stuff, which is where they're looking for partners. I mean, you're talking about the smaller banks and stuff. It's incredible. I'm digressing a little bit, but there's a bank in Philippines, a rural bank called Kantilan. Okay, not many people would have heard of it. Based out of Mindanao. The only bank in all of Philippines to have gone completely on the cloud. Right? One of the few rural banks based on this cloud infrastructure to have a very good mobile app that customers can access. Okay? Like you said, shameless plug for Apex. They found all the partners for developing the mobile app to go onto the cloud, everything on the Apex platform. The point I'm trying to make is that it is not that there is one common thing. This is a bank that has thought very, very differently and has therefore moved ahead, leaps and bounds, leaving many others, much larger institutions, much far behind. A rural bank on the cloud. It's incredible. It's incredible, right? So each bank, different stage of evolution, different management thinking, they're all looking for different kind of things. So there's not one particular thing that stands out.
But I think you brought up a good point, is I think the conversation is definitely changing. I mean, well, even 2 years ago, that would have been like, I need a blockchain solution for payments. But now it's more, I need a payment solution that maybe doesn't use blockchain. Pat, I want to come to you. I mean, you're famous for asking questions. So I want to ask you a question about questions. Is what is the question that, or the topic or the question that the industry should be asking itself around open banking and APIs that it's not doing today? What is the elephant in the room that nobody sees?
Crap. That's a good question. So I think there's a few things here. I think, certainly one thing is the commercial value proposition. Mm-hmm. I think that's always hindered, certainly Europe, because that's been a massive issue on how can organizations make money from this? How can you start to generate revenue? I think that's been an issue in Japan as well. I don't think it's an issue here in this part of the world. I think there are lots of opportunities because infrastructure may not be as fully developed outside of Singapore and possibly in obviously India. So there are opportunities to kind of start charging a bit of a margin on it, but you can't crack that nut in the West. So I think that has to be really thought through. I think the industry should be asking itself is, it's not just account aggregation, it's kind of identity, it's it's credit scoring, it's a lot of pieces of information coming together. I think the industry has open data, and I'm not sure if you're going to move down that topic area, but it's got to be more than just banking information. It's got to be, non-financial and financial information coming together, and it should be that. I think that's the piece where I think the industry should be asking itself is, how can we get not just financial services, but other industry sectors to be involved in this and just to fast track it? And I think surely there will be a country soon that will be able to crack that now. I believe Australia is moving in that direction, and they're going to have kind of data protection laws in each of the, was it something I said? They're going to have data protection laws or consumer protection laws in each of the industry segments. And I think that then it starts to become interesting, but we've got to move much quicker than the way it currently is. I'm not sure if that's kind of helped address something, but maybe I could ask you that same question.
No, it was good. It was good. I think a lot of those questions need to be asked, and to a certain extent, I think the industry is forcing those questions to be answered. Right? I mean, you have to have a commercial model because you don't have all the funding there to futz around on models that don't work. We're almost out of time. Let me end with you. What keeps you up at night around, Nexus's business in general going forward? What are your key concerns and what keeps you up at night?
So obviously I shared that the next stage in the Nexus journey is really for us to spin off and be a standalone fintech, if you may. We call Audex. Basically, our plug and play is a digital bank in a box type of idea, and that for me is key. Which markets, which banks, who are the people that has the capacity, that has the foresight at some level to take us on. We talk about big banks, small banks. We talk about banks with innovation vision. And we need to identify these guys and for them to be able to look at what we offer as a service in a whole. So that's, I think, from a personal point of view, from a Nexus, from an Audex point of view, is really the next thing that we are gunning for. We will be spinning off in the next couple of months. We will be a standalone entity, which means essentially, as I shared earlier, all shackles are off.
Umang, final question and 30-second answer limited before we have to move on. But if we look 1 year down the road when we come back here for API Days 2024, what will have been the one thing that surprised us over the previous year? 30 seconds. Prognosticate the future.
He already gave the answer. July. He spoke to the gods and they said July 24. Something will happen. I don't know. It's very, very difficult to say. But I think one of the things that we'll probably see a lot of, and this goes back to the question you had asked earlier, is that we will see consolidation. We will see consolidation in the banking space. We will see consolidation in the fintech space. It is bound to happen. Far too many players probably on either side. That is something that I think we'll see a lot of. The one thing that I'm hoping to see a lot of, which I haven't seen, and I don't know if anyone here from the industry or not, but we talk of all the innovation that's happening in banking, and there is truly a lot of it happening. I don't see the same happening in the insurance space. Yeah. The industry, to me, looks like it's in the dark ages. And I'll be very happy and surprised to see if they start to move along in a very positive direction. So consolidation, bound to happen. We'll see that. Shouldn't surprise us, but that'll happen. Insurance industry, if they move along.
Perfect. It'd be a great way to end the session. Thank you, all three of you. Please join me in thanking our panelists for today. It's great to actually learn myself from some of the people embedded in this. So thank you.
My apologies, Pat. It wasn't anything you said. I just got a very bad cramp. I had to just straighten my legs. So that's why I had to walk off. My apologies.
Great. Thanks very much, Zennon, Pat, Umang, and Indra. Great discussion and great insights into how banking and finance is going to unfold. Really appreciate that. So we're going to take a break now for lunch. So lunch will be served in the partner village. We will return at 1:50 here for the connected fintech track. In the play den, there will be the application architecture track, and in the blue room, there will be the API first track. So please, really appreciate the panel discussion. Lots of thoughts for people to discuss over lunch further. So thank you very much.